rate hike and what he sees for the U.S. economy going forward. And the big deal, a court in Brazil has attempted to block the mobile messaging app WhatsApp. They say the company isn't helping them fight criminal activity. Our local security maven, Simone Del Rosario, updates us on whether this court ruling has any meaning whatsoever. Let's not dilly-dally at all. It starts right now. Our headline story, recession. Back in December 2008, when the U.S. economy was in the middle of the deepest slump in 3/4 of a century, billionaire investor Sam Zell did something remarkable. He became bullish on commercial property. He said, quote, "I believe that in a country that continues to grow and where the population continues to grow, we will see the first signs of equilibrium in the housing market in the spring of 2009. And I will expect by spring 2010, the housing market in the U.S. will look a lot better." That's what Zell said. And at the time, Zell was the owner of the Tribune Company, publisher of the Chicago Tribune and the Los Angeles Times. And that company had just filed for Chapter 11 bankruptcy protection the previous week. So Zell had every reason to be pessimistic, but he wasn't. And you know what? He was right. We soon saw a commercial property recovery, a normal housing recovery of epic proportions, and Zell benefited from being right and being early. Now, fast forward to this past October, and Zell was making headlines for selling property, agreeing to sell more than 23,000 apartments controlled by his real estate company, Equity Residential, for $5.4 billion to Starwood Capital Group. Now, that was a residential property sale, a sector that's been buoyed by cash investors like Zell. And Starwood's Barry Sternlicht has been saying, "This is the healthiest U.S. apartment market in my lifetime." That's a direct quote. So no biggie, right? Well, not so fast, because Sam Zell is saying he expects a recession within the next 12 months. Zell's view, he says that not only is there a high probability of recession, but the Fed's rate hike was 6 or 8 months too late. He says, quote, "I think that the economy is closer to falling over than it is to going up." Zell also thinks that devalued currencies make it very difficult for the U.S. to compete internationally with world trade slowing. He says, with currencies continuing to be manipulated, you're looking at the beginnings of layoffs in multinational companies, and that weakness is going to be pervasive. Finally, despite the uptick in core CPI, the U.S. measure of inflation, Zell sees global deflation as the real threat, with China the main reason. He says, quote, you can't put aside China. You can't put aside Europe. If China's numbers turn out not to be as accurate as we think, China could go into a recession. That's about as deflationary a scenario as you could possibly come up with, and one that would for sure impact growth and affect Janet Yellen's decision. So there you have it. The Fed has raised rates, but the man who called the recovery says it's hiking into weakness, not strength. Let's see where this heads. Okay, so the Fed has gone and gotten off the zero lower bound. How far will they go? Jim Rickards is on the show to break that down and much more. Now, Jim is a renowned author of books like The Death of Money. Just yesterday, though, the IMF said that $3 billion that Russia lent to Ukraine in 2013, that was an intergovernmental loan and not a private one. So before getting into the Fed, I asked Jim what that means for the workout options for Ukraine. Here's what he had to say.
Well, it obviously gives Russia a seat at the table, which I think is important, and they should. I mean, they're the regional player there. And, you know, the Ukraine situation is a good example of just how politicized the IMF has become. Now, look, the IMF has always been somewhat political. It started out in 1944 as a political project pursued by the United States to, in effect, dismantle or destroy the British Empire, and that was pretty successful. So I don't want to suggest that it hasn't always been political, but sometimes it's a little more overt than others. And, you know, people talk about Greece and how could you possibly lend to Greece. The fact is, Greece is under the umbrella of Europe, and Germany in particular, and they'll find a way to repay. But Ukraine is very much on their own. They're not in the Eurozone. They don't have a big brother, be it Russia or Germany for that matter. and they're completely non-credit worthy. So the fact that they're getting loans for geopolitical reasons, really at the behest of the United States, to prop up the Ukrainian government in their struggle with Russia, just shows how political this whole thing is.
Right, and Jim, let me switch to the Fed here. So the Fed, they finally raised rates. This rate hike has been coming for a long time, obviously, but billionaire Sam Zell, he says that the Fed is at least 6 to 8 months late, and that the U.S. economy is closer to falling over. I think this is a quote from him: closer to falling over than it is to going up. It sounds like the Fed is hiking into weakness. What's your view?
Well, I think that's right. But, when someone like Sam Zell says, they're late, that kind of suggests, well, better late than never. Like they should have done it a few years ago, but better late than never. That's not the right way to think about it, because that's kind of linear. The fact is the economy goes through business cycles and credit cycles. Now, I gave an interview on another network in August 2009. And the host said to me, what should the Fed do? This is August 2009. I said they should raise 25 basis points, very small raise. Don't be in any hurry to raise more, just as a way to say we're going to start the normalization process. There was no liquidity crisis in 2009. There was tons of money around. The panic was over. It was just that we were at the beginning stages of Ben Bernanke's experiment, treating the markets and all of us as investors and everyday Americans as guinea pigs in some experiment that he dreamed up. But by normal metrics, the Fed should have raised then. If they had raised in 25 basis points, really 2 or 3 a year, by 2012, they could have got interest rates up to, say, 1.75%, and they could have stayed there, in which case they would be in a position to cut today, which is what they should be doing. They missed an entire cycle, so it's not a matter of playing catch up. We're at the part of the cycle now where you should be easing. You don't raise, not only do you not raise into weakness, you should ease into weakness. That's the Fed's job. So we are entering weakness, probably a recession next year. The Fed should be easing, and they're raising. So it's, again, it's worse than playing catch-up. It's actually doing the wrong thing at the wrong time. The fact that the Fed should have raised rates in 2009 and 2010 and failed to do so is not an argument for raising them today on the verge of a recession. Two wrongs don't make a right.
Right. And so why do you think the Fed did it? Why did the Fed feel it needed to raise rates?
Well, part of it was just institutional credibility. They started in late 2014. I said in November 2014 that the Fed would not be able to raise rates through all of 2015. Now, there were 8 meetings. I got it right for 7 of them. Yeah, finally, with 14 days to go, or whatever, they raised rates. But this was at a time when Wall Street was saying they were going to raise in March, then they were going to raise in June, then they were going to raise in September and maybe October, et cetera. So, Wall Street got 1 meeting out of 8 right. I got 7 of them right, and obviously they raised in December. But their credibility was at stake, having said so long and so loud and clear that they would raise in 2015, even though there's no reason to raise. In fact, they should be looking for ways to ease. They had to do something, and they would lose credibility. 2 other reasons. One is they might be trying to deflate some bubbles. The problem there, it's another Fed blunder, because it's not like letting air out of the balloon. That's one of the metaphors that's used, but it's more like popping a balloon with a pin. It doesn't pop gradually, it pops all at once. So they're in danger of doing that. If they're trying to deflate asset bubbles, they may actually pop them and cause another financial collapse. And the third reason, which is also nonsensical, is this notion of raise to cut. We have to raise rates so we can cut rates. Well, if that's your feeling, why don't you just leave them alone? At least you'll start out in the right place. And Larry Summers has made the point that typically going into a recession, which we probably are, it takes 300 basis points of cuts to get us out of the recession. So the problem for the Fed is, can they raise 300 basis points fast enough so that they can cut enough to get us out of the next recession? The answer is almost certainly not. It's too late for that. Even if we're not in a recession in 2016, maybe it'll be 2017, but they're not going to get to 300 basis points of rate hikes until the end of 2018. So it's already too late. We'll look back on this rate hike as one of the great blunders in the history of the Federal Reserve.
Interesting. I like the fact that you say that, and apparently the focus actually has now been on the pace of rate hikes and what you were talking about. And the Fed has been saying that it's going to do 100 basis points or a full percentage point in 2016 and then another in 2017. Do you buy that?
Well, I buy that that's their forecast, but the Fed has the worst forecasting record of any institution I can think of. Every year they have a 1-year forward forecast on the economy. So in 2009, they forecast 2010. 2010, they forecast 2011, so on, all the way up until today. And course, we have the famous dots. The Fed has been wrong by orders of magnitude 7 years in a row. You can't have a worse forecasting record. And I don't mean, they said 3.2 and it came out 3.1. I would say nice going, guys. But it's, they say 3.2 and it's, 2.4, and then they say 2.9 and it's 1.9. I mean, they're not even close. So no reason to think they've got it right this time. So this whole thing about, every other meeting, 25 basis points. I mean, look, they said it's not a strict schedule, it is data dependent. And that's true. They always say that. But, if you were doing 300 basis points at 25 basis point increments over 3 years, that would be one rate hike every other meeting. So that's the implied tempo. No, they're not going to get there. They can't.
Time now for a quick break, but stick around because when we return, we talk about growing Chinese investment in the U.S. RT correspondent Marina Portnaya gives us the lowdown and tells us one place where Chinese investors are using EB-5 visas to gain access. Then in today's big deal, Simone Del Rosario uncovers an interesting story where a court in Brazil has ordered the mobile messaging app platform WhatsApp be suspended from use because it says WhatsApp had repeatedly failed to cooperate in a criminal investigation. Sounds like the U.S. almost. What's going on there? Simone will tell us. And as we go to the break, here are the closing numbers at the bell. Welcome back. Danielle DiMartino Booth is back on the show. Danielle is the chief market strategist at the Lisio Report, a former Fed advisor and an analyst who called the housing bubble early. Now, apparently the Fed thinks the U.S. economy is doing well. To wit, housing starts are increasing at a 1.2 million annual rate. That's up 16.5% year on year. And the MBA Mortgage Application Index shows an increase of 34% in demand for mortgages for purchase. So I asked Danielle what this says to her about where we are in the credit cycle. Here's what she had to say.
Look, one of the few hopeful signals that I've seen recently is that there was a subprime mortgage-backed security priced in the United States. This is several weeks ago. If that indicates that they truly are beginning to ease lending standards, well, then that might be a good sign for first-time home buyers. But I would throw two huge caveats out there. You have to look at this in a historic context. The MBA mortgage application series is at the same level that it's been at since 2010. Basically, it's been flatline. I realize we're up a third year over year, but you have to go all the way back to 1997 to see a time when the index for mortgage purchases was running at this low of a level. So it really does help to keep in mind historic context, and you have to go back 5 years to see, again, a flat line. And the other thing I would bring up is if mortgage lending standards are indeed easing at this juncture, does that do first-time home buyers any favors? I'd have to say the answer is no, given how much home prices have increased. I would hate for them to be jumping in at a time when rising home prices were getting ready to turn.
Right, that's a good point. Do you think that the housing sector and non-residential investment will actually contribute materially to U.S. GDP growth in 2016?
I think that a good portion of the growth that we've seen in 2015 has come from the housing sector. In fact, a lot of economists you saw after the housing starts report came out, you saw them ratcheting up their GDP expectations for the fourth quarter. But regardless of who you look at, I follow the Atlanta Fed now figures, we're still south of 2% on what expectations are for the fourth quarter. Whether or not housing can pull the economy up by its bootstraps in 2016, I say is a great unknown because of the detrimental effects that we've seen starting to emanate from the high-end housing market, which has really pulled the entire housing market along all these years. So I think it's going to be a push and a pull between lending standards on the one hand and whether or not we're in recession and high-end housing is taking a downturn for 2016.
Interesting. In the last cycle, obviously, housing was the area where we saw lots of malinvestment, and that ended in problems originating in mortgage-backed securities. That created the global financial crisis. But this credit cycle, it's high yield or junk bonds that are causing angst right now. How systemic do you think this sector is?
So I don't think high yield in and of itself is systemic. But that being said, I think a lot of people have their eye on the wrong ball. One of my greatest concerns, and I'll just throw a name out there, are that companies like Glencore carry investment-grade credit ratings. I think part of the story of the credit cycle that we're in, which is more far-reaching than the one that led up to the housing bust, is the fact that so much investment-grade credit has been priced in the market, a lot of which we will be calling in the years to come fallen angels, meaning they'll be downgraded. I think the junk market is set to grow in a very big way, and when you tack on what we know to be immense overvaluation in commercial real estate, by the way, worldwide, you've got a big problem in credit. It's not just high yield, but high yield happens to be the nucleus of what's to come.
Interesting, because you were talking about fallen angels. It makes me think of Petrobras, and so, you know, if you
50 billion.
Right. Yeah. If you expect contagion from this recent meltdown in high yield, you mentioned commercial real estate as an example. I'm thinking about other places that you might get contagion. Let's say, you know, student loans, things like that. Where should we be looking?
Sure. Look, I wrote a piece several months ago called Tiny Bubbles. And it was basically based on the premise that you're suggesting, Edward. And that is whether or not credit, which has been very contagious in a good way, right? We've had a positive feedback loop. Subprime auto ABS has begun to feed into very cheap credit card ABS pricing. That's gone hand in hand with student loan. With student loans going through the roof. That's also fed into the commercial mortgage-backed securities market. And as we started out here talking about investment-grade bonds, the McKinsey study, I think, is the most important that's come out of the post-crisis era, and that's that we're north of $200 trillion in an era that was supposed to be one of beautiful deleveraging, and that simply has not been the case.
To talk about the entertainment industry, George Howard is on the show. George is an associate professor of music and business and management at the Berklee College of Music. Now, Amira spoke to George about Taylor Swift, who made headlines after pulling her music from Spotify, a popular streaming service, because it put lesser-known artists at an economic disadvantage. Amira first asked him if he thinks she has the power to elicit real change in the music industry. Here's what he had to say.
Taylor Swift, just given her stature, is able to say, hey, I'm not thinking that this particular situation is right for me, Taylor, or for other artists. And when, like, any other artist on the planet says that, most people just go, yeah, I don't know, don't care, right? But Taylor Swift, just by virtue of her stature, is able to sort of get the conversation going outside of this very, very narrow silo of people who are either working in the music industry or really deeply concerned about it. And that's been the great thing about what she's done. I don't know if she's right or wrong or what have you, and she's certainly self-interested, and who can blame her? But what has happened, the sort of either intended or unintended consequence of her talking about problems in the accounting and in the ways in which artists are paid or not paid, has had this ripple effect where people who otherwise would just never think about it or talk about it have started to. And so in the month or so since the Apple thing and my writings and others, and I've been writing about this for 15 years, but I'm not Taylor Swift, so I'm just sort of speaking to my little echo chamber to a certain degree, whereas she breaks through that, and now it feels a little bit like the floodgates have opened a bit, and you've got people that ordinarily don't write or talk about the music business and the vagaries around it, talking about it, and people who ordinarily don't care about it, thinking about it. And that's hugely important. I mean, it does move us to sort of transparency. The other thing that's really interesting is a lot of these incumbents are very sort of old guard. They've been in the business, in their particular seats in the business for a really long time and are resistant to change. Well, they're getting older, and now there's a new guard coming in, and I just think the values are different and the technology is different, and we could see some transparency. That's good. That's just, unequivocally good. What's less certain is, okay, so we have transparency, we still don't have a business model. And that's where I get excited about sort of the blockchain and other things.
She has certainly opened up the conversation. There's no doubt about that. And we know it's not only Taylor Swift. We've heard the same kind of concerns come from a number of different artists, some of which recently, just less than a year ago, came together and created an alternative streaming service called Tidal. with a different model. That was launched back, I think, in October, but not a lot of great reviews since. It seems like the platform has fallen flat. So I wanted to get your view on what happened there, what went wrong for Tidal.
I think it's sort of a shame because, I mean, nobody's really even able to judge whether Tidal is good or bad. It was, you know, and my respect for I don't know him, but my respect for Jay-Z is off the charts. I mean, he's clearly a brilliant business person. But man, whoever sort of orchestrated that launch just really didn't get it. You can't. They did two things really wrong. One, they sort of chose their value proposition to be higher fidelity, and you know, for good or bad, most people just don't care. They're not going to pay extra for higher fidelity streaming music. There's a small set of people who will, and that's great, but it's not enough to sort of sustain a business. The second and bigger thing was that you know, they sort of paraded the world's biggest artists up there, who all of whom have made, you know, millions and millions of dollars in the music business or sort of ancillary businesses because of the music business, and said, we're not being compensated fairly. And so the majority, 99.9% of the artists who make vastly less than that, sort of went, well, wait a second, you know, there was this dissonance between these superstars talking about this versus everyone else, and so that really got it off to a challenging start in terms of figuring out, you know, exactly why they exist and who they're speaking to.
It is time for the big deal here, and today's big deal, a judge in Brazil blocked the popular communication app WhatsApp in the entire country for 2 days, saying WhatsApp repeatedly failed to cooperate with a criminal investigation. The ban was short-lived, as an appeals court today already overturned it, restoring access to the nearly, get this, 100 million people, Brazilians, who are using the free messaging app. RT's Simone Del Rosario joins me with more. You know, Simone, what was the court trying to do, and, you know, what's the backlash against it been?
Well, it was a Sao Paulo judge that ordered the country's telecommunications carriers to actually cut off this free instant messaging app, which is actually owned by Facebook. As you mentioned, this is nearly 100 million users in Brazil that were affected. That's half the country's entire population. The vast majority of the people who have access to internet service use this app. It's the most used app in Brazil, partly because phone service in Brazil is so darn expensive. People need to take advantage of this free messaging app to be able to communicate with each other. So as far as why this happened, local news sources in Brazil are saying that this is all centered around a drug trafficking trial in Sao Paulo. Drug traffickers apparently were using WhatsApp to communicate with each other. The court asked WhatsApp to actually intercept those messages, and WhatsApp either refused or could not do it. And in place of that, the judge, a single female judge, banned it through the entire country. As I mentioned, this is owned by Facebook. Mark Zuckerberg took to Facebook today. He said, I am stunned that our efforts to protect people's data would result in such an extreme decision by a single judge to punish every person in Brazil who uses WhatsApp. And that's really what we're looking at here. A single court order for a single drug trafficking trial affected 100 million users in Brazil.
That is astonishing. But, you know, obviously the ban didn't last long, and it was overturned in a matter of hours. What was the reasoning behind the overturn?
Right. It started today, and then just a couple of hours ago, an appeals court said that it was not reasonable to subject 100 million users or all of Brazil to this punishment simply because WhatsApp was not turning it over. But this is not the first time that we've seen foreign governments try to inflict this upon American internet services. They're increasingly more willing, actually, to block American internet services in the name for whatever their country is standing for. Twitter and YouTube were cut off recently in Turkey because of a censorship issue. But this comes at a really interesting time, actually, when the FBI and lawmakers are trying to decide whether they're going to force tech companies to give them a back door into encryption here in our country. So to see this paralleled in another country and have such an extreme outcome for it is pretty interesting. In this case in Brazil, a Facebook spokesman actually said that they were, like I said, trying to intercept those messages, put wiretaps on the messaging service, and WhatsApp said, we don't even have that physical capability to do that for encryption purposes. The encryption does not allow WhatsApp to intercept or put wiretaps on those messages. But it's what we're seeing now. Apple has also put themselves out of the way of having wiretaps or being able to intercept encryption or having a master key to be able to unlock someone's iPhone. Their tech companies you see are trying to step back from this issue, but here in our very own country, we're seeing the FBI and other lawmakers kind of decide whether they're going to force tech companies to do the same.
We're going to be talking about this a lot, and this is a big topic for me, so I definitely want to keep up the conversation. That's Simone Del Rosario. Thanks, guys. Thanks for everything. We love hearing from you, so tweet at us, at the gang here today. That includes James G. Rickards for Jim Rickards, DiMartino Booth for Danielle, Edward and H., that's me, Simone Reports, that's Simone. And remember, you can see all the segments featured in today's show on YouTube at youtube.com/BoomBustRT. From all of us here at Boom Bust, thanks for watching. We'll see you next time.
I'm Tom Hartman, and you're watching RT America. The United States is now officially an oligarchy.